Hello and welcome to Profiles in Risk. This is your host, Tony Cañas. Today I have with me Sam Broomer, President of Embedded Parametric Solutions at NormanMax Insurance Solutions.
Hi, Tony. Fabulous to be with you today. Really excited to say hi to you. Obviously, an amazing following. You do such good work in the insurance space. And really happy to be with you here today at Climate Tech Connect in Washington, D.C. So many good folks to talk to, so many great topics, very, very timely. And looking forward to a good conversation with you throughout the course of this conversation.
Fantastic. Thank you so much. And 99% of the time, I'm recording on Zoom. It is very rare that I happen to record in person. It really only happens when somebody really goes out of their way to make it in person. Or in this case, we were actually scheduled to record, I believe, yesterday, right? And then you messaged me saying, "Hey, I'm going to be on a plane at that time," and I ended up being on a plane at that time also. But you were very wise to ask, "Hey, are you going to be at Climate Tech?" And I'm like, "Of course." So here we are recording in person, and Climate Tech. So we're not. This episode is not about Climate Tech, but thus far, loving it. Like thus far, I'm so excited to be here in the inaugural year for Climate Tech. So for the listeners, if you are somewhere in the intersection with the climate and technology, definitely take a look at Climate Tech Connect. So Sam, we always give the guest a chance to give the elevator pitch.
Sure.
What is NormanMax Insurance Solutions?
Yeah, we are solving some really important challenges in the, certainly at this point in time, the domestic insurance space. So when I think about parametric insurance solutions, what we're trying to solve for is this gap, this growing economic gap of economic loss relative to insurance coverages. And we know part of that gap is being driven by what's happening with climate, which is a disruptor, and technology, which is in fact an enabler today. So parametric solutions solve a real opportunistic challenge for both consumers and businesses. On the consumer side, we're providing coverage where coverage does not exist today, number one. Number two, because it's parametric, it's a very fast settlement process. The adjustment takes place within days as opposed to weeks or months relative to a traditional indemnity policy. And one of the challenges we're solving very acutely on the homeowner side is covering deductibles. Tony, we all know that prices are going up, terms and conditions are becoming more restrictive. Sublimits are more in play today than in the past. It takes time to do loss adjustment. And during that same environment, deductibles are rising and rising very quickly depending upon where you live in the country. Parametric solutions do a really nice job of covering that growing gap between your first dollar of loss and when your insurance kick in. So that's very interesting. It's been a lot of fun for us. We're helping people obviously where they need it most all around the country. So whether it be hurricane, convective storm coming soon, flood, earthquake, these solutions really do help consumers. Tony, you had that same opportunity on the commercial side. So on the commercial property side, they have that same challenge from a growing deductible perspective. Yet at the same point in time, we see more risk connected to supply chains and business interruption losses that might not be covered by insurance today because of the lack of physical damage. So think about a disruption where you specifically you're not impacted, or maybe your guests coming to your hotel in this example can't make it because of something that's happened in climate.
Absolutely.
Or in fact, there's challenges with your workforce. So you have resiliency and disaster recovery considerations, supply chains are disrupted. So you have this real opportunity to cover business interruption, contingent business interruption without physical damage, which is a real requirement in the traditional insurance space. So I'm excited about that. That continues to grow, very much focused on helping folks in those regards with those hazards.
Fantastic. And for the listeners, so normally, since I'm recording on Zoom, normally I have your LinkedIn pulled up and the company page pulled up, and you can't see them on the recording, but they really help me. And I take notes feverishly, right? So I got none of that today. So going completely on memory and conversation today. But you did touch a lot of things that are so very true and that really resonate with me, right?
Sure.
So you started with the gap, and yes, the gap is a gigantic problem. As catastrophic losses continue to get bigger and bigger, the wildfires in LA, et cetera, like it's hard. The examples keep outdoing each other, right?
Yes, unfortunately.
And the gap keeps getting worse.
Yep.
So as an industry, anything we can do to lower that gap is absolutely crucial. And the deductible piece. So yeah, when 10 years ago, 15 years ago, when I was in my first insurance job, that was 09, taking the claim when it came into Farm Bureau. I took every claim and then I kept the auto claims and worked them myself if they were simple. The property claims at that time, the deductible for property was generally $1,000, sometimes 2,500.
Yep.
Right. And the states that I was working were Midwestern states. They didn't have separate wind deductibles. Right. Now look at today, especially in the deeply affected areas like Florida, California, hurricane prone areas, tornado prone areas, homeowners deductibles now. I would doubt that you can find the policy in Florida or in the Gulf states with $1,000 deductible.
I think you're right. When I started in this business, I remember seeing deductibles on the homeowner side between $250 and $500. And I thought that's absolutely amazing, even at that point in time.
Yeah, inflation wise adjusted, but like
even adjusted, we're much higher than we would otherwise would be, right? So
absolutely.
Let's just take 20 years for a fun example. You look at $250. Geez, maybe that's closer to $600 or $700 today, just with the CPI numbers. But the reality is, like many things, these deductible movements have outpaced inflation. So it's not uncommon to see a very basic homeowner, a first-time homeowner with $1,000 deductible, a $2,500 deductible. And then when you get into certain other parts of the country, if you're earthquake exposed, if you're hurricane exposed, you have not only your specific property damage deductible, which I would argue probably is closer to $1,000, $2,500, $5,000 or more, depending upon the size of your home. But you also have deductibles as a percentage of your coverage. So for hurricane, as an example,
so scary.
Imagine paying 3%, Tony, 5%, 7% of your coverage limit in an actual deductible as a result of a natural catastrophe. Everyone knows they need to put funds aside for a rainy day or for a bad day or for an investment, right? Something very, very positive. But it's also very hard to do that as well with all these other externalities with rising inflation, heating costs. It's really tough. So this does help a lot.
Without question. So as we're recording in 2025, the US has been dealing with 4 years of bad inflation, right? And like I'm from Costa Rica originally. I grew up with 17% inflation being fairly normal. I just spent a year in Argentina between the middle of 23 to the middle of 24. Well, they were dealing with 100% inflation.
Yeah.
Now they're dealing with like 200% inflation, right? So for me, on one hand, I've been in the US for 23 years, so I do understand that inflation, anything above 2%, is very, very painful for the US consumer. And it is something that we definitely need to get in order. But it's like from my perspective, it's like that's super low, right? But the point that I was trying to get to is even before inflation became a problem over the last 4 or 5 years, the average American, the research says the average American has a hard time coming up with $400 for an emergency.
Sure.
Right. Without going further into debt. So the homeowner population is a little better than that, I would guess. But also, if your home has appreciated to $300,000-$400,000, even in a medium cost of living area, that 3% deductible, that 5% deductible, that a percentage deductible becomes a really, 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 really scary thing. Like at that point, you very well could lose your home over not being able to cover your deductible.
Sure.
So parametric absolutely becomes a necessity, right? Like we've gone from when I started this podcast 7 years ago, the word parametric was very rare. In fact, I got my CPCU in 2011, and I don't believe that it was ever mentioned in the CPC program. It might have had like 2 lines, right? And I very well remember the first parametric episode we did. It happened to be a company out of the UK that serves the developing world, and now it's becoming more and more a bigger thing. So NormanMax, your parametric solutions. One thing I found really interesting is you didn't talk just about tornado or just about hurricane or just about wildfire or just about earthquake. You're actually addressing the wide variety.
Yeah, I think that's really important. We have a recency bias, of course, we all do as humans, and there's a lot happening obviously in our society, right? So we know there's been some recent floodings. Folks have been trying to solve the flood problem for some period of time. So we're very keen on that business. We recently brought in an organization called Flood Flash. Flood Flash is both a parametric solution, but also an IoT solution. So very specific measurements seeking to eliminate any basis risk. Basis risk meaning, in fact, Tony, that if you have a loss and you have damages, that you also have a recovery for that as well. So the IoT device coupled with our flood capabilities, maybe even baked into our hurricane offering, really does provide the consumer with a great amount of coverage and surety that if they have this damage, they have a source of very quick, thoughtful, liquid recovery. So that is really, really important. I think if you're able to do two or three things, you're able to build out those capabilities with different technology, you have the ability to serve more of the distribution. So, in many cases, folks think about these products as, well, I have this product, I'm going to go out and sell that product. And I really know it's going to work well. I'm on the supply side, people need it, it's going to be amazing. And then it typically doesn't work that way. Typically takes a little longer to adopt these solutions. So I think having a scope and breadth of solutions within these hazards is really important. And then the flood flash example, I think that's very helpful, giving consumers the confidence that the solutions they're purchasing are going to react and meet their need at the time of loss. Super, super important.
How is it distributed? So do you go through the independent agency channel? Do you go direct?
Yeah, that's a really good question, Tony, and something that's very much evolving. Maybe starting off with the history of these products.
Perfect.
Historically, parametric has been something you would see kind of in maybe developing nations where traditional insurance is not necessarily available. And a lot of that was enabled through technology and smartphones. So we saw that originally in agriculture and other parts of the world. Really started off kind of as micro insurance. And of course, that you would see enablers, non-commercial governmental entities would spend a lot of time on these topics. The UN, obviously, a very important part of what they're doing in their resiliency efforts across the globe. That has moved actually from that kind of bespoke use case to a very large account business. So the way parametric historically has been, and NormanMax is at the forefront of actually making this pivot. But you would see sophisticated buyers and sophisticated brokers selling these solutions. So think Fortune 1000 transnational companies who maybe have a captive and want to round out some of their retention within their program, or maybe don't have other sources of recovery or can't build an limit, would buy parametric solutions to solve a specific either flood, earthquake, or hurricane challenge. That is still being done today, and it's a very, very large part of our business. We're also somewhat unique that although we operate as an MGA, we also have as part of our investment holding NormanMax Lloyd's Syndicate 3939. So our capital stands directly behind us. It is with the Lloyd's structure, with the Lloyd's licensing on a global basis. That gives us an A+15 that's very amenable to all those buyers at this point in time. So you think about kind of where that started with this small account business, now very, very large account business. We actually think there's real opportunity within the retail marketplace. In that retail marketplace, there are so many different ways to win. You have folks doing unique digital distribution. You have traditional independent agencies. You have direct distribution. You have entire ecosystems where you can engage 4, 5, 6 different ways with the consumer or with the business. So that is really, really important. And we work very closely with the independent agency plant in Florida, around the country, to really fulfill that objective with these solutions. I think there are 2 other larger opportunities that are beyond buying products specifically to your location. And it's going to take some time, right? Education is important, awareness is important. But imagine if these products were more available and more adoptable to more people. To do that, you have to go where the attention is today. You have to go where there's already attraction, where you can have that very easy entry and scale an organization and scale a business. So, these historically have been very thoughtful products. And Tony, what I want to do is I want to take these products and turn them into features. And I've seen this happen before in many areas where you've kind of gone from big organization conversation to smaller business to individual consumers. So think about the evolution of the EPLI or employment practices liability marketplace. Think about cyber liability. It's gone from this really, really big business down to smaller businesses.
Yeah, everybody needs cyber nowadays.
Yeah, exactly. Even as an individual, personally, as a homeowner, you have some of those protections available to you. I think parametric has that same opportunity. And what I'd like to do, and what we're working very hard to make happen, is take these products and transform them into features. And dare I say, features you will find in every commercial property policy in the country and every homeowner's policy in the country. So it's not competing against, it's not a substitute for, it's an enhancement to traditional indemnity solutions.
Mhm.
And so you would ask, okay, well, why now? Well, I think, and the marketplace has been telling us that there is very good product market fit. We know that the market has this challenge between economic loss relative to insured losses. We know prices are going up, which is hurting consumers and hurting businesses.
Severely, to the point that it's making the mainstream news, right?
It really is. Yeah. I mean, I never knew insurance was that fascinating. Well, Tony, between us, I always knew insurance was super fascinating.
But the rest of society.
Yeah, they're catching up, right?
And unfortunately, they're catching up in a negative way, right?
Well, not the way,
Like,
but
we're making the news on being unable to find insurance in California,
Right.
on my premium going up 30%,
Right.
right? On like really, really bad news.
Yeah, that's exactly right. We are doing good things, Tony. It's a very thoughtful and very noble business, but you never want to see anyone suffer or be in harm's way. We all, of course, have families and friends. We want to make sure we're helping society. That is the function of why we're here. Well, I think Parametric makes that better. And certainly on the homeowner side, can you imagine an enhancement endorsement to a homeowner's policy that automatically has a feature in it that allows you actually to cover your deductible? Your property damage deductible, your wind deductible, it doesn't really matter because it's event-based, not specific to that any one property that you're underwriting. You're looking at the event probability as opposed to the exposure within that residence premises in this case. So an enhancement endorsement that offers a small limit, depending upon what your deductible is, Tony, $1,000, $5,000, $10,000, $25,000. And you would say, well, who has a $25,000 deductible? Well, those wind percentage deductibles get you there pretty quick, don't they?
Yeah, the home that you built for 150 grand is now 500 grand if you want to,
Yeah,
if you need to replace it.
that's exactly right.
And now those numbers are unfortunately like quite realistic. It is scary as like one of the scariest things. Like I'm a renter nowadays, and I might keep it that way forever because it is getting so scary.
And Tony, just to that point, you are a renter today, but imagine if you were owned a condominium, or you were in a condominium association, or you also had a schedule of properties. You know, that insurance might be bought at the collective level.
Mhm.
And if it's a 5% deductible or a 7% deductible, there's even challenges in getting mortgages in part of the country where you have a wind deductible that's higher than a certain number.
There was an article just a couple weeks ago. Somebody shared it on LinkedIn. I opened it. I haven't read it, but the headline was very much head of the Fed. I can't remember his name right now. We're Washington D.C. I should remember this. Head of the Fed basically saying at some point mortgages might simply be unavailable in some parts of the country because of not being able to get insurance.
Yes. Yeah, that's a real challenge. I don't think we're going to solve that specifically and directly here. Certainly, if insurance is not available, having a parametric solution is certainly very helpful in that regard. The opportunity I want to solve for and how we'll engage in the community, a community that I've worked in for a very long time and have a ton of respect for everybody who's trying to push through these solutions, is create an enhancement endorsement to a homeowner's policy that automatically covers your deductible at a very, very small price. An insurance company has the opportunity to partner with an organization such as mine to get information, everything they need to be in that business: rates, rules, forms, loss adjustment, customer marketing, client marketing, everything they need to make it happen on a turnkey basis. And then we could take back a reinsurance session between 50 and 100% and pay a commission on that and override. And imagine the customer satisfaction, the retention, the opportunity that insurance companies then have to attract new business because they're solving a real problem for a consumer that is a homeowner or even a renter or someone who owns.
So for the carriers, so my listeners are 50% carrier, 50% broker.
Sure.
So we talked a little bit about the broker side first, and we've dug into the carrier side. So on the carrier side, if I'm understanding correctly, I'm just going to verify my understanding here. For the carriers, you guys can take me from a carrier that writes property to a carrier that writes property and has this option for the parametric piece to buy down the deductible or whatever. And you can run white labels for us. Kind of, I think of that as the HSB model, basically. HSB has done it forever on the, I don't know if they invented it, but they've run it forever on equipment breakdown, right? Fantastic.
If I may, that's an amazing analogy that they do a really nice job. That is the distribution model for equipment breakdown. for the most part in the entire country. And Tony, you mentioned carriers, right? So there's a variety of ways that we can work with
Okay.
carriers. And you can actually work with us, engage with us in a way that doesn't require a ton of commitment up front. The first thing we can do is we can work with your in-house agency to provide these solutions for the benefit of your customers. So whether you want to market them or you want to have them available, if a customer is asking, your in-house agency as a carrier has the ability to access us. That's number one. Number two, if you are a carrier and you're working with a number of other independent agents, that's not your in-house carrier. Let's say you have 10,000, 15,000, 25,000 agents as part of your availability where you're sourcing business from the marketplace. We can actually work with them as well to help them in their business as an agency for their own account that maybe is not connected to your organization. But we can also go the route you mentioned, which is we can create our solutions, white label them with and for you, provide you everything you need to be in the business, and in a very seamless way, take away this deductible challenge that insureds have, while at the same time providing other benefits depending upon your jurisdiction. So you typically find out that docks, seawalls, outdoor furniture and equipment, for the folks in Florida, you might have seen some of the videos, pools are not covered. And if you're on the coast and you have a pool, it's going to be full and it's not water. It's probably sand. So those are all losses that consumers are taking themselves.
Pools are expensive.
They can be, right? For sure. But I think the opportunity from a carrier perspective is to solve for the deductible challenge. Rising deductibles, which are going to continue, as I foresee it, Tony, given the gap between the kind of frequency and severity of loss relative to the pricing that the marketplace needs to continue to have viability in the traditional insurance marketplace. And we'll talk a bit about commercial property, what the other opportunity is there, which of course ties into deductible.
So,
but I think it's broader.
Well, on the homeowner side, one comment that I want to leave is I would predict that for the next few years, this is something that your homeowners, as they find out it exists, they're going beyond. So if you're a carrier, if they find out this exists, they go and they buy it elsewhere. Okay. Right. And I would imagine that over time, as more and more carriers start offering this, it becomes table stakes.
Yeah.
And then basically what you don't want to be is the last half of carriers that, right, when this becomes table stakes, you don't want to be the carrier that doesn't have the option, because then you're really tempting destiny, regardless of how well you've treated your clients. You're really they have a real incentive to leave you so that they can not have a separate bill for parametric deductible coverage, right? Like they want to unify.
Sure. Yeah. You want to go where the network effects already are, where scale's already been achieved. This is an opportunity to enhance your brand, to enhance your customer service and retention and attraction. But having said that, it's a partnership business, right? So this is not something we're looking to do by ourselves. It's something we're going to do in partnership with others. It's a business model and a business that I've been in for a long time, and I recognize the importance of those partnerships. So certainly working with carriers makes a ton of sense. But I would also look to brokers and reinsurance brokers really as an opportunity to differentiate their offering before actually the insurance companies are seeking to differentiate their own. And we're happy to try pilots and kind of explore what's possible in this area, but it is impactful, and I think it's going to happen very quickly. Give me a couple of years and we'll see where it goes. But
so NormanMax will partner with basically all the steps in the chain, basically from the retail sales to the wholesale piece, to the carriers, MGAs, et cetera, to reinsurers.
Yeah, that's exactly right.
Fantastic.
I think there's ability to shape this product and this model and this process to work with all attributes of our distribution. They're all super, super important. We're not trying to pick one winner. We want to be partners in those businesses in totality.
So what does it look like on the commercial line side, where we're talking really big numbers?
Yeah, it certainly could be. So parametric solutions are typically found today on the commercial line side. Tony, in those areas that I mentioned, those kind of high large account premium numbers. So think Marriott hotels might be a good example. They have properties all around the globe, and guess where they sit? They sit in places where the wind blows and maybe the ground shakes, and these places are subject to flooding. So they recognize that risk as part of their risk management programs and are purchasing these products today. We do a lot of that business, and as a light syndicate with our licensing around the globe, we see a lot of that business as well. The opportunity with embedded commercial property is everything I mentioned a moment ago. Now, it doesn't, let's not worry about the pools and the docks and the seawalls. Businesses aren't so much concerned about that. But hey, if they're a marina, that'd be pretty important, right? So you do have that consideration. But here's the opportunity as I see it, and I've discussed with so many folks in the marketplace. It's around the opportunity to cover business interruption, contingent business interruption without physical damage.
Yeah, we haven't talked about business interruption yet. So let me
Yeah.
interrupt you there for a second.
Go for it. Let's do
The
it.
business interruption side is super interesting, and it really came it really came to light for us nerds in this industry during COVID, right? Because all of a sudden, so many businesses affected by COVID with no physical loss,
Right.
right? So now businesses are keenly aware that this is a problem, that they could have losses that are not directly affected. So we need to reinvent ourselves to cover those exposures that are not a direct physical loss to my own property, whether that's a loss to the neighborhood or whatever, right? Even if my property didn't get hit. So yes, how can parametric help on that side, on the business interruption side?
Yeah. So a good example maybe is wildfire. It's not a business that we're in today, but you can apply it to earthquake, you can apply it to flood. Flood's an amazing example, use case of this. It could be distributed in so many different ways, or earthquake, right? So we all know what happened, unfortunately, in Maui. Maui suffered a very large wildfire. It has happened before in history, not in recent history, but certainly it's happened to grave effect most recently. So I think about Maui. I've been there before, Tony. Have you been to Maui at all?
I've done a few of the Hawaiian Islands, but not Maui.
There was one year there was a conference out there. It was amazing. It was really, really good. So I got the opportunity to spend 3 days, otherwise known as 7.5 days in Maui for this conference. So if you're going to go that far, you have to do it right.
Absolutely.
So it's a beautiful place with great people, just really, really thoughtful. Of course, the wildfire came through and took out much of the island. But as I understood it, Tony, some of the hotels, which are situated on the far end of the island, kind of off by themselves, those hotels were relatively okay, as I understood it. Now everyone suffered loss, of course, so I'm not calling out winners or losers, but the hotels were less affected, at least from physical damage. But Tony, here's the
All the
challenge.
infrastructure is gone.
But here's the chat. Well, that's it exactly, isn't it? So I can see kind of 3 things in which Parametric can help with. So if you have an event that triggers the event in the cover itself, right? Then you would have this coverage available to you. And in this case, we're talking about wildfire. Well, first of all, people are canceling their reservations, right? It's a sad place. It's a tough place to be. There's a lot happening on the island.
And it's even an ethical tourism question, right? You want to be careful.
Yeah.
Do I like part of it? Yeah, they want your money. But the other part of it, is it really, people do ask themselves those questions, right? Is it really ethical for me to go have a vacation in paradise when the residents of paradise have lost everything?
And the hotels recognize that as well, because proactively, as good corporate citizens,
Absolutely,
they were refunding funds to people, so they could have their money available to them to do something else or go back to Maui at a future point in time. So there is a revenue component to it. That's the business interruption piece I've discussed. 2 other things occurred as well. Tony, it's an island, right? So if you're an employee of one of these hotels, you either live on the island and you were affected, and or your family lives on the island and they were affected, or you live at the hotel itself. The hotels at that point in time, as I understood it, were very busy. And they were busy because people had to have a place to go, almost as a humanitarian rescue. But to have the staff available to work during those times of heavy stress was very, very difficult. So it became a resiliency consideration. It became a business continuity challenge within a short amount of time with a very large organization that has a lot of capital. So it's not an extinction event. Maybe it's a small earnings event for them. But disruption in workforce is a challenge. And then also, in addition to that, because you're on an island, supply chains were disrupted, moved for humanitarian purposes or otherwise. So the hotels, although everyone felt the brunt of this, the hotels too were having their own unique challenges around a business. So I think in addition to deductible management, in addition to reinsurance behind captives within these larger organizations, in addition to reinsurance side by side to traditional cat reinsurance, you also have this opportunity through parametric solutions to cover business interruption where you don't have associated physical damage. And that could be a very large number for businesses of all sizes. The very big ones recognize it today. The very, very small ones probably think they don't have that exposure. But I think in the middle market space, this is a winner and an opportunity to enhance these traditional commercial property policies with a feature of parametric that's easily understood, communicated, and actually exercised in time of need.
Makes perfect sense. I'm always curious about the origin story. So if I'm not mistaken, NormanMax has been around for longer than just the parametric piece.
Yeah.
But I'm curious of the origin story of the parametric piece. How did you guys decide to that this was needed?
Sure. That's an excellent question. So prior to NormanMax, there was a predecessor MGU that was put together about 10 years ago. So think about that for a second. You had a commercial enterprise doing parametric 10 years ago in the United States. And you would see those activities and processes overseas and maybe in sub-Saharan Africa, but you didn't see a lot of that activity happening in the space. So we have a team of people that have great experience in this regard. And there are lots more folks today in the parametric space than there were yesterday. But this organization, being the organization that succeeded our MGU, which was very well capitalized and working with very thoughtful capital providers on the paper side, is now this what I'll call full stack carrier, where we have this MGA structure in the States. We have the ability to control our capital from our lead syndication that stands behind us. It can also stand beside us in the syndication model and allows us to do many more things globally. So the folks at NormanMax have great experience here. And it was really the vision of our founder, Brad Meyer. Brad Meyer actually was the chairman, CEO, and founder of one of the largest, actually the largest at one point in time, homeowners writer in the state. So imagine, the day-to-day, everything you do in this business during the hurricane season is around that challenge. And through that challenge came opportunity. Opportunity to not only think about the importance of indemnity insurance, but also how do you improve upon that? And I want to take that a step further from Brad's vision of recognizing there was a big gap in the marketplace, to finding a way to fill that gap, meeting the people where they are through traditional products, enhancing them as features, while at the same time growing our business within the reinsurance vertical, in the Fortune 1000 transnational space. And I think we're just well positioned for it. I think the product market fit is there. And I also think the timing is here as well. The timing being very, very important.
The timing feels absolutely perfect. Yeah.
Yeah. So we'll see where it goes. We're going to learn together, of course.
Fantastic.
We're going to do through partnerships and continued dialogue in the marketplace. But I'm excited. I'm in the market. I'm working with folks, having amazing conversations, taking next steps, building out business plans in partnership with other carriers and reinsurance brokers. This is happening. This is happening now. And I can't wait to see where it's going to be in a year's time frame.
So we're recording April 15. I did get my taxes in about 12 hours ago. So we're recording on April 15. This episode will probably go out in May. So keeping that in mind, is there anything in the development pipeline as I magically disappear because I got a little bit far back? Is there anything that is coming down the rest of the year that you can already talk about? And it might not be an appropriate question since you guys are not like a SaaS platform, which is who I have in the podcast a lot of time. But
yeah, no, I appreciate the question. And again, totally unscripted, right? We just happen to be together.
The whole show is unscripted.
Yeah, this
always
is just us having a chat. So, no prep, no Zoom, no kind of off chat. This is the chat. So yeah, I think there's two things happening. The first thing is our acquisition of Flood Flash, which was approved by the UK FCA.
Congratulations.
And thank you. And that should be all wrapped up here in the States well before the time this actually goes out to market. I think there's amazing opportunities to work with IoT, bringing IoT together with traditional insurance and with a feature within parametric.
Yep.
That's not something you've seen before. Historically, when people talk about parametric, they worry about basis risk. And I would argue that basis risk is, human element adjusting, it's shrinking terms and conditions, exclusions, sublimits, and we all live with that together as a society, given the way our traditional products work. We want to eliminate that to as much as possible. And we think this partnership, this acquisition of the amazing team at Flood Flash, working together with our team, is going to be able to really put together some products that are unique in the flood area.
I know who that is. It just hit me. Yes, UK based. They went through the Lloyd's Labs. They've been on the podcast. I will make sure to link I normally when somebody's been on the podcast, I tell you the episode number, but 650 some episodes, I have to look up the episode number, but I will. Okay, awesome. Congrats on that acquisition.
Yeah. So fabulous people, really,
Yes.
really smart. We're very lucky to have them as part of our team, and very excited to take that solution to wrap it in with their IoT solution with other people that are in the traditional indemnity place. That's very unique. I think there's interesting things happening with other hazards where folks are using sensors and IoT to make that a better experience for folks that are affected. I think you'll see more in that area coming forward. And I also think, in addition to traditional distribution, agents and brokers, right? We talked a bit about cedents and reinsurance brokers. We talked about reinsurance brokers and reinsurance. I also think there's a tremendous opportunity for retention, attraction, resiliency, and exercising a disaster recovery plan for large corporations in America. And I'm not talking about necessarily as part of their insurance program or standing behind their captive as a reinsurer. I'm actually thinking more as an employee benefit, a benefit for employees when work is disrupted, let's say because of a flood, that the organization can work with those employees to put dollars in their hand very quickly to create resiliency in their workforce, to make sure folks are taken care of. Tony, we have seen so much happen within the flood hazard in the last, I guess it's less than 2 weeks now, where some activity moved all the way across the country. It's unique to think about the fact that you can help people, you can help businesses, but imagine helping employees that are part of businesses, right? So I just love this employee benefit conversation that's possible. I think there are some large benefit brokers in the marketplace who see the potential.
Oh, that's a fantastic idea.
Well, I'm not taking credit for it. I do have some folks that I've chatted with who have brought this up in the past. And, Rick Flood, Rick is another parametric organization, and Nikita's a fabulous person. She has brought this up just generally speaking. And I think it's really interesting. So, I think you typically think of traditional insurance as being distributed through an agent broker, and we want to make that process even better. And we want to do it in the ways we discussed. But I also think with the digital enablement and working with customers, meeting them where they are, there's additional opportunities. Even when you get, Tony, to embedded that has nothing to do with insurance. Like you have a customer journey, you have loyalty, you want to retain your customers, they love your brand and what you do. Now imagine if there's an adjacency where you can help them with some measure of parametric coverage for flood, earthquake, or hurricane. I was going to get to it eventually. Hurricane. You can embed a small portion of that within your product. So I don't have any proper amount now to share or nothing we're doing in the space, but it's on my roadmap, right? So think of the favorite place you bought a ticket for a concert for. Geez, what happens if there's some challenges in getting there because of a natural disaster, and your ticket owner or ticket person who issued the ticket isn't going to give you a replacement or refund you for that ticket? There's opportunity to consider those journeys as well, where you take that pressure off the commercial business, the ticket issuer, and put it onto indemnity product, or put it onto, in my case, an embedded parametric solution. That could go a lot of different ways.
So we're just getting started, even though it sounds like, so even though, especially in the States, it's come a long way from nobody's heard of it 10 years ago to we're seeing more and more efforts here and there. It really sounds like the breadth of things that parametric can be helpful is really we're just kind of like starting to dig into the iceberg, and the iceberg goes pretty deep.
It does.
In what it can do.
It can be overwhelming. There's a lot of things to think about, and obviously having a business plan, a roadmap is very important. We want to make sure we're having good messaging in the marketplace. We're learning as well. At this point, this is a hypothesis. Let's see how it actually shakes out. The more people I talk to, Tony, the more I learn about what's possible, the more ideas that we collectively can come up with together. So it's not necessarily exactly what we're going to do, but maybe we learn something new and having these partnership conversations and we work together to find something that's even better than we thought was what was possible. So yeah, I think starting off with in-house agents of insurance companies, I think having the conversation with reinsurance brokers on reinsurance parametric solutions, working with carriers and reinsurance brokers on an embedded solution that's put together as an enhancement endorsement for homeowners and for commercial property to solve this deductible and this challenge with BI without PD are kind of the first stops in the journey. But I think the journey is on, and I think it's going to be really enjoyable. I can see that first mountaintop. It's really evident in the really enthusiasm and the conversations I'm having. And you can see the mosaic that get painted from there. It's just the endless possibilities and an amazingly important business that I'm so blessed to be a part of.
Fantastic. I think that's a good mic drop moment to kind of finish up on. Sam, thank you so much. This has been a fantastic episode. Very, very interesting. Yeah, this is very, very exciting stuff. I can't wait to continue to see it grow within the space and have you guys back in a year or two and see where it's gone.
Yeah.
What kind of parametric that we haven't that we hadn't thought of yet.
Yep.
And you guys have implemented at that point. When this goes live, I will tag both you and the company on LinkedIn, and I'll include the old episode on Flash Flood. Flood Flash.
Flood Flash.
On Flood Flash. Thank you so much for your time today.
Yeah, delighted to be here. Thanks for having me, Tony. Really fortuitous conversation. So much to do. Please reach out if I can help you in any way. Just love to have partnership conversations and looking forward to learning from others and let me know how I can help.
Fantastic.